Banks are the engine of the modern economy. They play a major role in the system of the economy, but the way they work is at a knife point. The emergence of digital currencies is revolutionizing how people save and use their money, and this could have consequences far beyond banking. For you to understand this deeply, let's take a quick look at how banking started, and then we will explore the meaning of digital currencies and how they might take over the power of central banking. Let us get started. In this new era of capitalism, new systems and principles are emerging, but the fundamental principle of banking has been the same for centuries and revolves around the greatest monetary creation trick of all, a process called fractional reserve banking. Here's how it started. The banks originally stored gold for investors, but later they realized it had one fatal flaw, that everyone would claim their gold back at the same time. So they began to loan some of these gold deposits out to other people. As time went on, banks started issuing banknotes, or IOUs, rather than physically giving out gold, and these IOUs started being traded in the economy. This meant the amount of money in circulation was much larger than the amount of gold actually held by the banks. Nowadays, most money is digital. When banks make a loan, it creates a new asset on its balance sheet and credits the borrowers with new funds, which creates a new deposit. Digital currency, also known as digital money, is the electrical version of physical notes or coins, which make electronic payments possible. Digital money is not physically tangible like a dollar bill or a coin, but it can be received and transferred using online systems. They can be stored on a decentralized and distributed online ledger using blockchain technology. One of the well-known digital currencies is Bitcoin. Is this video providing value to you? Be sure to smack that subscribe button for more informative videos. It is like a decade now since the high rise of cryptocurrencies, and many people seem to embrace this innovation, which ended up creating a new form of digital currencies known as stablecoins. This necessitated central banks and governments to strike back by starting to issue digital money, which is referred to as central bank digital currency, CBDC. These central bank digital currencies, issued by the central bank, mandated financial institutions of the government, hold equal legal status as their fiat currency counterparts. Dcash can be a suitable example, which is the CBDC issued by the Eastern Caribbean Bank for 7 countries. Since the adoption of CBDC started, cash payments have steadily declined, and this trend has been going on for years now. The findings show that from 2019, 42% of the cash payments will decline. So, cash will be the least used payment method by 2025. This comes from the notable efficiency of a payment system predicted by central banks, also known as central bank digital currencies, or CBDCs. By nature, CBDCs could streamline payment systems without unnecessary intermediaries and payment processes. By removing intermediaries like the transactions to go through different banks, meaning depositing from one bank to another, CBDC would spur payments to be measured in seconds at a reduced cost. By the way, did you know it's always a good idea to use a VPN when you're using crypto? If you don't have one, be sure to check out our preferred VPN using the link in the description. Now, China is one of the countries that swerved cash payments. It's running ahead in the global CBDC race with its digital yuan identified as eCNY, and it's ready for launch. Since April 2022, the People's Bank of China has been doing large-scale live tests. As you watch this video, 140 million people, which is about 10% of the population, have created wallets for the digital yuan for a total of 62 billion yuan, approximately $9.7 billion. Additionally, over 1.5 million merchants accept payments with eCNY wallets. In the United States, no decision has been taken on issuing a CBDC in the US payment system as of January 2022. The general topic of CBDC is still very much debated, but the Federal Reserve is still studying the development of a digital dollar for public use, with plans to publish a discussion paper in the future. In the United Kingdom, the Bank of England, along with HM Treasury, declared in November 2021 that they would launch a consultation in 2022 to evaluate the case for a United Kingdom CBDC. The BOE added that a UK digital pound dubbed Britcoin will arrive at the earliest in 2025. Generally, the point of view is that CBDCs will be successful if they are used on a vast scale. They will have to create the conditions that will lure the mass of people to use them. Curious about how blockchain is changing money? Then click on the tab, and we will see you inside the metaverse.